Hello, this is Will Allen, Sentara Capital here, and we are back with a market update, but we're here in my office, not in the studio, because we don't have 2 or 3 days to edit these videos. So much is changing from day to day, and we wanted to give you a fresh update. The last thing we had for you was last Friday, and at the time we said, hey, the markets had been in the midst of a 2-day sell-off of significance. We said oftentimes what happens with the markets is they don't bottom on the Friday. A lot of times they sell off into the close on Friday. Over the weekend, there's lots of negative headlines. People are checking their statements or logging onto their accounts, getting into a panic, and they go put sell orders in or email their advisor and say to sell, and then oftentimes the markets open down big on Monday. Guess what? All that is exactly how it played out. And we said in the past, a lot of times you get a bottom on a Monday because of those reasons. And this morning we opened, the NASDAQ was down 4.5%, the S&P almost 4%, Dow was down over 1,000 points. And then in the first 15 minutes, that flipped completely. The NASDAQ went from being down 4.5% to up 4.5%. The Dow had a 2,600 point swing in just a short period of time. Now, it didn't last, those big gains, because we got a headline where Donald Trump said, hey, if China keeps on the tariffs that they recently announced against us, we will put another 50% tariffs on versus China coming up here soon. So that took the markets down. Now here it is about 245 on Monday, and the NASDAQ's up a little bit. The S&P is flat right now. We'll see what happens in the last hour. But here is our strategy and what we're doing for clients. Normally, right now, we would be buying and adding, taking on risk, because we got the sign we needed that the market's pretty much at max panic. If you come look, we talked Friday about the VIX, which is a measure of volatility. This is a 10-year chart of the VIX. You can see it closed Friday at 45. That was the highest close in the last 10 years, other than during the big COVID sell-off. It went much higher. Today, this number went to over 50, okay? And typically, when you get spikes in the VIX, that is the end of the sell-off. Here's the problem this time around. The major factor behind this sell-off have been the major tariffs that were announced last week, and it was very broad, and we haven't yet gotten some deals made. I said last week, to buy and be comfortable that the bottom was in, we needed to start seeing deals. That hasn't happened yet. One thing we have gotten is more announcements. Just recently, the Secretary of Treasury, Scott Bessent, tweeted out that he is now begun official negotiations with Japan to try to make a deal. We know there have been talks with India and Vietnam, but we need actual deals, and we're going to see if those come in the next few days. If so, that's going to be a big, big positive. If not, we will continue to take steps to get more conservative on rallies. Now, let me explain one thing. Originally, when these tariffs were announced by Trump last week, they were supposed to be retaliatory. In other words, hey, if France has a 20% tariff against us, we're going to put a 20% tariffs on them. However, when they came out, it wasn't just looking at what were the tariff rates. It also were taking a look at other factors as well. The trade deficit, if they have another tax that exists out there. And then in some cases like Vietnam, they said, hey, there are a lot of products from China coming through Vietnam to avoid the tariffs against China. And for that reason, it isn't enough in this administration's eyes for another country to say, hey, that's right, we'll drop tariffs to zero. That's not enough to make deals. So we will see what kind of a bar and how willing a lot of these other countries are to make some of these adjustments. Don't forget, a lot of these other countries buy or sell a whole lot more to us than we them, and so it hurts their economies in a significant way when we put these kind of tariffs on. So that's a big thing that I wanted to cover. Now let me show you a couple other charts that matter now. If you didn't see The Friday update, we showed you last Thursday's initial claims for unemployment insurance. When people get laid off, if they don't find a job immediately, they file for unemployment insurance. That came in at 219,000 last week, which is near the low end of its range from the last 3 years. And again, why this matters these last couple of years, a good jobs market has meant consumers were spending money. And if the consumers are spending money, we don't go into a recession. That jobs picture from last Thursday was very fresh, very up to date because we get that weekly. On Friday, we got the jobs report for last month that showed 228,000 jobs added. 117,000 were expected, so almost twice the numbers added. So the jobs market is in a good place. Again, what will concern us if the current tariffs that were announced last week go into effect and are in effect for the foreseeable future, because eventually that's going to start to hit the jobs market. But so far, that hasn't happened. Okay, one other thing that we want to show you here is this takes a look at when you've had a reading where over 80% of companies in the S&P are trading at a 1-month lows, which that checked off this morning. Take a look 12 months later at what the gains have been in the markets. And you will see that on average, that has been a 22% gain. And outside of the financial crisis, or in the financial crisis, where a year later it was down 35%, there are some amazing gains that have been had here. And by the way, the same thing applies if you look at the VIX. When the VIX spikes to above 40, above 50, looking out 6 months and 12 months later, the returns have typically been phenomenal. So the main takeaway here is if some tariff deals can be reached soon, there are a lot of amazing bargains out there now. We will take advantage of them. If we don't get tariff deals announced soon, then what we will look to do is get more conservative in client portfolios and also trade up. That's the other thing that you can do, which is we did a little bit of this last week, which is selling ETFs that kind of own everything and moving those funds into positions that are your cream of the crop top companies that have also been thrown out, because what typically then happens after that is those top quality companies outperform, whether the market's going down or up, and we want to take advantage of that. Again, we're going to be here giving you updates as important things happen in the market. If you are not a subscriber, please make sure go to the channel, the YouTube channel, and subscribe so you don't miss any future videos. To our clients, we appreciate you being with us. And again, in the last 27 years of our history, from 1998 on, we've seen a lot of these significant market sell-offs, and we're here to guide you through them. Thanks for watching. Take care.